What's going on, everybody? It's your boy C-Zar, and we are talking about Keeta, KTA, today. Hit that like button, subscribe. Thank you all for being here. It is the 6th day of February. Here we are at about 28.3 cents with roughly 5 hours, 17 minutes left in the day. I did buy more KTA yesterday. I told you guys in that video that I was going to buy more KTA. I did buy more KTA. What I bought was just the position that I had originally sold. Okay, the position I had originally sold back here. I just bought more just below 26 cents, like right here, right in this range actually. So I think actually it would have been probably here before the drop, but nonetheless, nice recovery here. Not financial advice, not a financial advisor, but if you're like me and you bought somewhere around here, it's not a bad idea to take profits. I'm not going to play with it. I already played enough. I thought about selling here and I didn't, so I'm just along for the ride. I do believe KTA is going to move up. I do believe, and before we get into the nitty-gritty stuff, that we are in this nice rounded bottom and we're going to see a nice penetrative move to the upside. I was kind of getting excited that it would happen here. That's why I didn't sell. I'm like, oh my God, are we going to see it? Is it happening right now? But no. Looks like we're pulling back. Let's go over that. Let's dissect this a little bit, okay? KTA on Coinbase. Let's look at Coinbase. Let's do Coinbase, yeah. First off, this is something that I used to say oftentimes in the beginning of this channel, because I used to do requests a lot more. And with those requests, we go over new coins all the time. Oftentimes coins that are getting fresh listings. A lot of my viewers, a lot of you who've been here since the first year that I did TA, or not did TA, sorry. I've been doing TA for like almost 10 and a half years at this point. My YouTube channel, the first year that I did my YouTube channel, you probably remember me saying things like, when we get listed on Coinbase or Binance, the two biggest crypto exchanges in the world, typically, you get a 60% drawback. At least 60%. It's anywhere from like 60 to 75%. It can be more, it can be less, but here we had a 73% drawback. So we got listed on Coinbase, 73% drawback. I don't think that we're going to see lower prices. I don't think that we're going to break out from here and go lower. I think if we listed on Coinbase and we were going to sell off, we would have just kept doing it. But something changed here. The rounding out really started to come to life, came in as far as the picture goes. And now we have this flat top where we found resistance once, twice, debatably 3 times. I'm not going to say it, but 3 times here, 4 times there. There's no such thing as a quadruple top. Now, the one argument that I can make here is, technically, this is a higher high. Technically, that is a standalone high. So that could be a fake out. Maybe this is a triple top with the fake out and we came down. But if and when we come back up here, the fake out be damned, the triple bottom be damned, or triple top be damned. What it is at that point is this is like the 5th or 6th attempt up at this area. This line is not going to hold as resistance. We're going to break through it. And when we break through it, you guys, it's going to be eruptive. It's going to be very, very nice and explosive. And we likely do move up to prices around 60 cents to 80 cents. Maybe more, maybe less. So that's where my thoughts are for KTA as far as, is it a good time to buy? Is it a good time to sell? What's the path? Are we going down? Are we going up? Whatever. That's kind of the idea, the plan that I foresee happening in a nutshell. Let's talk about the short-term stuff and see, is this a good time to buy? I mean, again, not financial advice, not a financial advisor. Relatively speaking, sure, it is. But let's see if we do go lower. Let's look at our indicators. Looking at the 1 hour time frame, first and foremost, good bit of volume coming in on this pump. It's nice to see a lot of volume at the top, a little bit of selling pressure. This is probably people selling who were late to the bear market and they're taking cash off the table on principle. Maybe they're in the red, maybe they're barely in the green, maybe they're neutral, whatever it might be. Maybe they're very well in the green. Maybe they bought when KTA was worth like 2 cents before it ever had a listing on TradingView, let alone Coinbase. But I don't think that what we're seeing here is enough selling pressure to take us to lower prices. Maybe, maybe not. We'll see. From a low to a high. And I think maybe I should take this low, actually. Yeah, we're right below the 382. This is actually a really good area to find support, not going to lie, but we probably do go a little bit lower. I wouldn't be surprised if we went back down to 26.2 to 25.5 cents. We might go below 26 cents one more time, you guys. Do we have any gaps? The 1 hour time frame on Coinbase is lethal with these gaps, bro. It's like you don't even have to do TA. You should always do TA. Don't just blindly trust gaps. Man, you will get screwed up, but Nope, we don't have any gaps. We do not have any gaps to guide the way, which is good. We actually have some gaps to the upside. If anything, we've got some gaps to the upside. 1 hour time frame here, looking at the indicators. RSI looks bullish. Stochastics have reset. You actually have lower lows. They do look bearish, like right here. Like right there, they look bearish. I don't know why that's happening. Look bearish like right here. But the lower lows with the stochastics, the higher lows with the price, it's hidden bullish divergence. MACD crossed above the 0. That's good, you guys. We're looking good. I'm confident that's not the high. It looks like it now. It looks like a fake out high. I'm confident that's not the high. We probably do go higher. Stochastics are resetting a little bit. Resetting a little bit here. You got far away from the orange line. You got overbought, so you had to come back down. You know, a little bit of divergence there. The MACD, look at this. Look at this. And I think we talked about this a couple days ago. The rejection here at the 0. This rejection is not rejecting. That's a really good look. This is a good look. We're below. It's very rare that you'll see me get bullish on the MACD when the oscillators are below the 0. But this is one of those moments. I think it's completely appropriate to be bullish here. It's a really good look. I don't like this candle, but the indicators look appropriate to suggest continuation, at least in my opinion. Finding some turbulence here where we found turbulence before, that's okay. The results are what matters. So what we want to see is something that ideally doesn't go below 25 cents, okay? It can. That doesn't mean we're in trouble if it does, but ideally we just don't do that, right? It's like here. If I was looking at this from a low to a high, I would have said the same thing. Ideally, we don't go below 24.3 cents or 24.8 cents, the golden ratio, which now is at 25 cents, 25.5 cents. I would say ideally we don't go below here, but we did, and we still had a bounce that went higher than that. You know, it can happen. So even in unideal situations, we still can rip up. And I'm going to take a moment real quick to just point this out too. This is a fact. This is a statistical probability that I've addressed several times with the Fibonacci retracement tool, and this is something you can use too and identify yourself on any time frame, 4 hour, daily, whatever. It's more likely to occur on higher time frames, less likely to occur on shorter time frames. But if you have a significant enough range, the thought here should work out. The thought is this. Here's your low. Here's your high. The first interaction you had with the golden ratio was here, from your low to high. Of course, you interacted with it here. Of course, you tried right here to interact with it, but that was before your high actually came in. Okay, so once your high happened, your first interaction with the golden ratio was here. Statistically speaking, on your first interaction with the golden ratio, you find support. You would expect to find support. If you want to go down, maybe you find support, you find resistance, and then you go down, but you at least find support at the golden ratio. Statistically speaking, it is not likely to break through the golden ratio on the first attempt, which is exactly what you did on the first attempt. When you come to this statistically improbable outcome of breaking through the golden ratio on your first attempt and hitting the 786, 886 levels instead, typically these moments are very volatile moments. In this statistically unlikely thing where you break through the golden ratio, the statistical probability now is that in a very short amount of time, you'll rip back up to this area or to the 236 or oftentimes through it to a new high. I've said this plenty of times, and I'm just making it a point now for anybody who hasn't heard it, who might have heard it before and didn't understand it. For someone who heard it, they understood it, they took it to heart, they memorized it, and we're just showing how it worked again flawlessly, right? This idea of going through the golden ratio in one attempt. We take this low to high here. Notice how here you went through the golden ratio, you went through it in one attempt, and again, even on this short time frame, you went all the way back up to your 0.5382 area. This is the minimum. The 236 is typical, and going through that is even pretty typical as well, seeing a higher high like we did here. It doesn't have to be a move like this for this logic to apply. And you can use that in any form of analysis, especially when this is especially helpful on the shorter time frames if you're trading, but it's better, I think, on the daily and the weekly and the monthly outcomes, especially for longer term positions, if you ever see setups like this. KTA, getting away from the schooling, talking more about the stuff here. I do think we continue to rally higher. Daily time frame, a little bit of a double bottom here on the RSI at the 40, not bad. I don't like that we broke out of our uptrend. I don't like that at all. I really don't like that at all. What I don't like even more is that we broke out of it and now we're in a downtrend. But on the bright side, this downtrend does have parameters, and those are parameters we can vibe off of. We're probably going to go higher. And there we'll find resistance. We'll find resistance there at the 60 on the RSI. That's actually a very common level to find resistance at. Hey, look, we found resistance here before. You know, it makes sense. And it's in trajectory with this potential lower high, lower low path that we're on. So what I'm calling for there, man, if we found resistance there, but if we found resistance at the 60, we probably don't get too far above these highs. So, okay. So we might have more time to scoop up some KTA. No need to FOMO. Either that or I'm wrong and we don't find resistance here, we break through. And that's great too. If we break through, that's phenomenal. That's great. I would love to see it. Your MACD's rounding off the zero. Maybe we do break through. Maybe we do. I will monitor this thing like a hawk on the short-term stuff when we get up here. But let's pretend for a second that I'm right and that I'm Confucius and I can see the future, okay? If we find resistance here, what likely happens is we'll find resistance somewhere around this same area that we've been finding resistance at. Maybe it's a slightly lower high, a slightly higher high, another fake out, whatever. And likely from there we consolidate back to similar areas as these lows. We might even go slightly lower. And with that, we should be in the oversold zone at the end of our downtrend and then ready to break out and then actually ready to take on a form that'll get us overbought. So what I'm getting at here is if right now we don't break out and break through the roof and go up to 60 to 80 cents from here, if that move doesn't happen from here, then likely what we have is one more attempt where we find resistance somewhere in this zone, one more attempt back down where we find support either at these lows, it could be a higher low, maybe it's a lower low somewhere in this zone, probably below where the current price is, and then later this month we can try for this attempt. Maybe it'll be the end of February going into March that we actually break out to this 60 to 80 cent target. Okay, so it's kind of good no matter how you slice it, I guess. Unless we plummet to our deaths, which again, statistically speaking, I just don't think that that's the probable outcome. It can happen, I don't think it's going to happen. The path that I see ahead, again, it's a few different options. One, we're about to rally freaking hard, which I really believed before making this video, and now I don't believe it as much. Two, we'll come up here, we'll consolidate a little bit, and then we'll rally. Or three, we'll come up here, we'll consolidate a little bit, we'll probably break down, get a higher low or a lower low or something in this area as support, and then from there, then we get our freak on. Then the real move will happen, and it'll take us back to these highs and probably just above there. That's my guess. I said that one time, I was like, that's my guess. And they're like, so you're just guessing? What do you think TA is? It's statistically backed guessing. That's all it is. That's all it is. So you're gambling. Well, gambling is guessing too, but you're not using, I mean, hopefully you're using statistics to back your gambling, but typically people just go off of a whim. It's a little bit more sophisticated, but yeah, it's like gambling. Yeah. I feel like this is going to happen. I think, I believe, I'm guessing. Yes. That's what predictions are. That's exactly what those are. Somebody tried to give me crap of it, and I'm like, yes, congratulations, you learned English. I'm sorry. Looking at the daily MACD, man, we can afford to go a little bit lower or stagnate or consolidate. We don't have to bounce right off the zero. With the MACD, it's more of an area anyway. So just, to me, it really does make sense that, again, we find resistance there, come back down. Maybe that was this. Maybe we find resistance here. That was it. Now we're coming back down. I don't think so. I think we'll pump up a little bit more. Just like how, here, that was like your real point of resistance, but we had secondary points to sell off. I think we're going to have secondary points to sell off. And then later this month, that'll be when we attempt to do this, or sometime in March. Hit that like button, subscribe. Thank you all for being here. I want to look at one more thing just before I end the video here and just make sure that I'm not missing anything. Let's just see. Okay. For anybody that stuck around, I'm glad you stuck around because I'm going to totally, what's the word I'm looking for? Rewrite some of the things I just said. While it is true that it appears as if we've broken out of this upward sloping trend, right? And now we're in a downward sloping trend. One could make a very, very solid argument that we're still in our upward sloping trend. That these were just blemishes and that the true trajectory is this. And we just bounced off that true trajectory, you guys, these lows here. It's pretty freaking clean. You can see it with your eyeballs. Maybe there is more of a possibility of going to see this move happen right now than I thought. But whether it's now, whether it's at the end of the month, whatever, I'm going to say, statistically speaking right now, I'm less convinced that this happens at the end of the month than I was a second ago. That doesn't mean I'm less convinced that it happens at the end of the month. I'm more convinced that it happens now. I'd say it's 50-50. So it's either going to happen now or it happens then, but I am expecting that we'll break out soon. And certainly from here, I don't think that this is a relative high. I think that we will build back. In the short term, maybe over the next 24 hours, we're at 28.4 cents now. Maybe we come down a little bit, but I would think over the coming days, certainly by the end of next week, we should be at higher prices. Maybe we're even above 40 cents or 60 cents as early as by the end of next week. Because damn, that's actually a really good good look on the RSI there, on that bounce there. But we'll see. It all depends on how we react from here. I don't really have anything else that I want to say, so I'll just end it there. Hit that like button, subscribe. Thank you all. This is why these thoughts where I'm like contradicting or confusing myself, maybe confusing you, where I'm like, this is not the high. We're going to go a little bit higher, but then we're going to come back down, and then maybe later in the month, then we'll come back up here and try to break out then. Or maybe we just break out here right now, but statistically speaking, it's not likely. All the confusing rhetoric I'm talking about, I don't care. It doesn't matter. None of that shenanigans matters. The main point is, and if I could just summarize it in a very short and concise way, this is a good area to buy. This will be a good area to sell. Hit the like button, subscribe. Thank you all. I'll see you on the next one. Not financial advice. Bye-bye.